this mine will run for 20 to 30 years.
All right, ladies and gentlemen, my name is Jamie Keach from Resource Insider, a mining investment newsletter. And today I'm here on behalf of VRIC, the Vancouver Resource Investment Conference 2021, to talk to some great companies, meet some great CEOs. And today we're sitting down with the president and CEO of VictoriaGoldCorp, John McConnell. And we're going to talk about Victoria's Eagle Mine, everything that's going on up there, and the company, a producing gold mine in the Yukon. So without further ado, John, thanks for taking a few minutes to sit down and talk to me today.
Thanks, Jamie. Hello, everyone.
All right. So for those who have never heard of Victoria Gold, and I imagine there's only a few out there, but can you give us the 30,000-foot view of who you guys are and what you do?
Sure. We're a publicly traded company on the TSX. We moved from the Venture Exchange late last year. And we operate the Eagle Gold Mine in Canada's Yukon territory. In full production, we'll be producing roughly 200,000 ounces per year at an all-in sustaining cost over the life of the mine of less than $800 per ounce. So big margins at current gold price. So,
okay. I'm looking at your share chart right now. And, in preparation for this interview, I was thinking back to when I actually went and visited the Eagle Mine with you. And I believe that was in summer of 2015. And if I look at the chart now, you guys were trading at about $1.60 at that point. Today, as we record this, you're at $12.76. So, it's been a pretty big 5 years. And, if I remember back correctly, at the time you were still you hadn't even really begun development at that point. So, can you give us a little bit about this journey of how you created so much shareholder value over the last 5 years? And then maybe we can talk about what comes next and what potential shareholders of Victoria can look forward to and what the key catalysts are over the coming months.
Sure. I'm sure many of your viewers have heard reference to the Lassonde chart or the life cycle of a junior miner. And, there's two times when you make money on a junior. One is at the discovery stage. We're well past that. And the second opportunity is as a developer is moving from building a mine, moving into full production. And that's the stage we're at now. And we've seen that re-rate as we came through construction and into operations.
Okay. And how much are you currently producing? How many ounces did you produce throughout 2020?
I don't have the exact number. It was just over 100,000 ounces. But, in the fourth quarter, we produced roughly 45,000 ounces. So, if you just do it quarter by quarter, we should be producing 50,000 ounces per quarter.
So, you said 100,000 ounces roughly over the year, almost half of that in the last quarter. What was going on over the previous 3 quarters? Was this all part of the ramp-up period? Were there delays or issues? How do you explain so much of that return coming in the last part of the year?
Yeah, there's two things. One is, as you said, mechanical issues. Sometimes chutes aren't designed right and you have to redesign them. In our case, we found the material was more abrasive than we'd anticipated. So we were going through liners and things like that at a far faster rate. And, then you look to find different types of liners. There's harder metal. You can go to ceramics. Sometimes, it's a rubber liner. But it's a little bit, there's lots of smart people that have experience with this. Mm-hmm. Unfortunately, COVID prevented us from bringing those people in. So you can imagine trying to diagnose an issue via a Zoom call as opposed to having the expert on site.
Yeah.
But, come July, August, we were able to get that expertise onto site, and it's no longer an issue. So the second aspect of the ramp up is this is a heap leach operation. And, we're seeing that a full recovery cycle of gold is close to 200 days. So, we're actually taking gold off now that would have been stacked on the pad, almost half a year ago.
And so this is just part of that natural ramp up, and I guess sort of the heap leach really hitting critical mass of functioning properly.
Correct. And, we feel we'll get to steady state production sometime in the third quarter of this year.
And is steady state production 200,000 ounces per year? Is that
a little more than 200, but yeah, that's a good number.
And John, I don't know the answer to this. What is the life of mine of the Eagle? What is the life of the Eagle mine?
Yeah, based on the reserve, it's 11 years. But, we're having good success with exploration. As well, the feasibility study was done at $1,250 gold. Mm-hmm. And certainly at a higher gold price means you can go deeper. So we're actually drilling some deep holes now to explore at depth. And, my gut feeling, I've been in this business for plus 40 years, is that this mine will run for 20 to 30 years.
So as of today, you have, almost an $800 million market cap within the company. Let's talk a little bit about the financials of Victoria. Do you have significant amounts of debt? Are you cash flow positive? Do you have cash in the bank? What does the general financial situation look like?
Yeah, we have roughly $175 million in debt. We've paid down ballpark 30 or 40 million this past year. We refinanced the original project construction debt just before Christmas. So our lenders are now BMO, CIBC, and BNP. The refinancing was done at a much lower interest rate. We save about $10 million in 2021, so quite significant.
Yeah, I guess it's you get a much better deal on that when you're in production than when you go out for those sort of debt financings pre-production, I assume.
Well, the project's de-risked, and certainly, BMO and CIBC in particular did their full due diligence before they would refinance the project debt. But, they see it as a very low risk money lending situation now.
And how much cash are you guys generating annually now? Or maybe I should ask, how much do you anticipate generating in 2021?
Well, you tell me what the gold price is going to be, and I can give you a pretty good idea, but it'll be somewhere north of 150 million in free cash flow, US.
Okay.
So roughly 200 million Canadian in free cash flow.
200 million Canadian. All right. So let's talk for a minute about what it is like working in the Yukon right now, both with COVID going on and I guess generally speaking. Have you had any issues on site in terms of getting your staff there, keeping people safe and healthy, keeping things operating effectively over the last year?
No, it's been very good. Recognized COVID was going to be an issue quite early on. To give you an example, we didn't send anyone to PDAC. We, saw the writing on the wall and said, this is going to be an issue. And so my whole executive team and I, we went to site and put together a plan that would keep us operating. Met with government officials and, said, here's our plan. And, they worked hard to allow us to keep operating. We did some things like we went from a 2-week in, 2-week out schedule to a 4-week in, 4-week out schedule. And, that's been hard on people. So we're actually going right now in the process of going to 3 weeks in, 3 weeks out. And people say, "Wow, what's the difference? Why is 4 weeks hard?" And, you're from BC, it's roughly a 12-hour drive from Vancouver to Calgary. So if you can imagine driving from Vancouver to Calgary every day for 28 days in a row, that's what working 4 in, 4 out is like. So
yeah,
it's hard on people, and we start to see productivity losses after 3 weeks. So and people are away from their families, so it's been a trying time for a lot of people. If your wife is home with a couple of young kids and you're away for 4 weeks, that's hard on everybody.
Yeah, no doubt it adds up. So they're making that transition to 3 weeks. Are most of your employees, are they based in the Yukon, or are they coming from all over Western Canada, perhaps?
Yeah, we've been very successful at recruiting Yukoners and bringing Yukoners home. So roughly 50% of our employees are Yukoners.
Mm-hmm.
I would say probably 30% come from British Columbia and 20% from the other prairie provinces.
So, as I understand it now, you guys have just over 3 million ounces in reserve at Eagle. Is that right?
Yes.
And you are the biggest gold mine ever in the Yukon, correct?
That's correct.
So, when I look at the Yukon, and I've looked at many projects there, there are a few places that compare to it geologically, but there are challenges working there. There's challenges with infrastructure and energy costs and access and all these things. You guys have been able to clearly very successfully address that. Are you looking seriously yet on behalf of Victoria at, I guess, M&A prospects within the territory? Are you looking at acquiring other projects? Do you think this is sort of the starting stage of a real Yukon-based multi-asset mining company? We look at a number of jurisdictions. We're not quite ready to enter any sort of M&A process. We feel, 100% of our time still needs to be focused on getting Eagle up and running and optimized. So we keep an eye on what the other companies are doing in the Yukon, but I don't see anything right now that's at the stage Eagle was when we acquired it 11 years ago, back in 2009. So we keep an eye on what people are doing, and there's certainly some great companies that are exploring in the Yukon, mm-hmm. but there's nothing in our sites right now. And what made Eagle so unique? Was it its access to infrastructure? Was it the advanced stage of exploration? How did that stand out for you particularly?
Both of those. I mean, it was something you could drive to. Had a power line within 40 kilometers. Was a large deposit. As I said, I think this will run for 10 to 30 or 20 to 30 years. People, point out that it's low grade. For a heap leach mine, it's probably average grade.
And what is that average grade?
0.65 grams per ton.
65%.
But, what people forget is that when you look at a open pit heap leach operation, there's 3 things you have to consider, and one is grade, obviously. But the other big one is strip ratio. So the number of tons of waste you have to move for every ton of ore. In our case, the geometry of Eagle is such that over the life of the mine, the strip ratio is less than 1-to-1. So we move less than 1 ton for every ton of ore.
Yeah. Can you give up people an idea of how unusual that is? And I've seen mines of strip ratios of 10-to-1, 15-to-1. There are very, very few operations in the world with such a low strip ratio. And I guess I assume that largely accounts for such a low cost of production per ounce.
Exactly.
So, John, before we say goodbye, there's going to be a lot of investors watching this conference. There's going to be a lot of companies presenting. A lot of people are interested in gold, getting exposure to gold, making money over what they see and what I believe is going to be a very significant bull market over the coming couple of years. Why Victoria over your other mining competitors? How do you guys stand out compared to other mid-tier mining companies?
I would say, the fact that we'll be cash flowing $200 million per year, at current gold prices. I think, if you compare us to many of our peers in terms of metrics like P/NAV, we're at the low end. And I think as we prove that Eagle is up and running properly and we're cash flowing, people will see that, we are probably an easy double over the next 12 to, 24 months. With Victoria, unless gold price goes to $5,000, we're probably not a 10 bagger, but we're pretty easy double over the coming months.
Is there an environment where Victoria would ever pay a dividend, or is that not on the table?
We certainly will, I would expect we'll have paid down a significant portion of the debt by the end of the year. And I would think that's a discussion we'll have at the board level in the fourth quarter. But personally, I own 1% of Victoria, so I have a very large shareholding, and I'd love to receive a quarterly dividend check.
All right. Well, thank you very much for taking the time today, John. Any parting thoughts that listeners should be left with? Anything I haven't covered?
No, I think you've done a great job, Jamie. And I think
all right.
People should have a good look at Victoria.
Well, guys, thanks for watching. And you're listening to John McConnell from VictoriaGoldCorp. That is VGCX.com. And you can find out more information there. I'm Jamie Keach from Resource Insider, and you are listening to the Vancouver Resource Investment Conference 2021. Thank you very much for watching, guys.
Thanks, Jamie.